Hello and welcome to the trade. Well, let's get to the charts, and today we are going for gold with Jonathan Tacadena from NBC Markets. Jonathan, welcome to you. In fact, you're even sporting the golden tie
absolutely.
as
Just,
well to
dressing
go
the part.
with it. Why gold at the moment?
Why gold at the moment? Okay, so specifically, while I was on holidays, gold was finding good support at 4,000, and I was thinking, what's the next thing that's going to kick this thing higher? And what we had was the yen intervention. So the Fed actually bought some yen via euro yen, and we haven't seen central bank intervention like that in, I think, 10, 15 years. So quite a big moment for the debt markets and the whole debt pile in general. And that's what's caused the bottom on the floor of 4,000 for gold. And it's bounced today, and it's nudging on 4,400 now. And what we've seen is that a lot of the leading gold miners have already bounced to new highs. Okay, so we've got Capricorn, Volt, Dundee Precious Metals, and Southern Cross Gold. So they're four of the biggest ones out there, and they're already trading at record highs. And what I've brought today is that what we'll see now, usually when we have a full-blooded gold rally, is that the leaders lead, obviously, but then the middle of the pack will tend to play catch-up, and that's what I've brought here today. I've brought the next three that I think will hit record highs fairly soon.
Let's go there then. The first one being Westgold. The name gives it away. It is based in Western Australia. Exploration, development and the operation of gold mines. It's up, about 100% over the past 12 months. But as we've seen with the others, sort of having come off over the past 6 months.
Yeah, absolutely. So Westgold is actually 38% from the highs. So I think there's that move in it there. So it has fallen back quite a bit with the gold price. But with that, sort of move 38% from here, I think that makes it a good trade for today. You've got maybe about a 20% downside risk here that if gold does stall, but I think that if it does catch on, it bounces from here. So a couple of numbers from Westgold. They beat production by 20% in the last financial year, and their AISC came in at guidance at 2,800 Aussie per ounce here. So what I will actually talk about is when I was on the call on Monday, because I had Northern Star to research, I actually looked through their presentation, and the line that stood out for me in their presentation is that, and this is from Northern Star's presentation, lowering the economic cutoff unlocks district ounces. So what that actually means is that economic cutoff means just means that because the price of gold has risen so much, the ounces that were on the fringe that they weren't going to mine before, they suddenly become economic. And that's for Northern Star itself on one of their projects. But you can extrapolate that out to all the gold miners out there with decent projects out there. And that's why I think these Westgold, and then the next one that I'll be talking about, Greatland Gold, it's almost a shoo-in that they hit record highs from here.
Well, you said it. Okay, so Greatland then. What are you seeing? So it's up, 150% over the past?
Yeah, absolutely. So Greatland Gold, one of the things I like about it, they have gold and copper. They actually beat their production by, I think, 10% in the last financial year. And then they also beat their AISC predictions as well. So they predicted an AISC of 2,300. They came in at 2,200 per ounce. So even a lower production cost than Westgold itself. And their mine is roughly about 5 million ounce reserve as well. So quite a large operation there. And I think that, as I said, if Northern Star are able to find extra ounces because of the higher price in gold, I think Greatland Gold will do the same there as well. So just as a bit of a historical, a year ago, gold was trading 3,400 USD, which is roughly about 5,100 Aussie. Today, gold is trading 4,400 US, and which is about 6,200 Aussie. So even if you take into the fact that say diesel costs might have gone up and say cost of labour might have gone up, these companies are just printing basically an extra 20% straight to the bottom line just on their gold production. So just looking great here for the gold miners in general.
But it's even those that aren't producing. In the next one being Minerals 260. So once again, we're in WA, and what it is up more than 500% over the past 12 months.
Yeah, so this one's going to be a little bit more volatile, but what it does have is that it is not in production yet. It's due to produce in 2028, so it's still 2 and a bit years away. But what they do have is that they have pretty much a 5-star backing there. So Franco-Nevada is one of the, Franco-Nevada actually invented the business model of gold royalties. So what they do is they actually go into mines that need money to get into production, and rather than actually get interest on their money, they actually take a percentage of the actual gold produced. So Franco-Nevada, when they invested in Minerals 260, it was actually the largest investment outside of the USA that they had done. So if the best gold royalty company in the world is investing in Australia and found a great project, you know it's going to go into production. So while it is two and a bit years away from production, it's still trading only about 1.4 billion in market cap. They already have 6 million ounces in reserves just from their current drilling. So if you extrapolate that to the ones that are producing, it should be a $6 billion market cap when it gets to production. So plenty of upside from here. It's 23% from the actual all-time high, at $1. So yeah, I think it gets there on this next gold run. So yeah, so they're three names that I like at the moment. So what I'm actually doing is, I've got a bit of Capricorn, I've got a bit of Southern Cross Gold. I'll be taking a little bit of profit of that and putting some into some of these names.
Can you get it wrong? Is there a gold stock you shouldn't be investing in?
Oh, absolutely. So there are a lot of mines. So what will happen is that what you want to do is follow all the good sort of fund managers, and they will always look at the safest plays first. Yes, you can get it wrong and go too far down the track and go for someone with a really, really good story than trying to look for exploration potential. But with these names, these guys have plenty of ounces in the ground. And as I said, gold has already just risen, and I think it's found the next floor, which is a platform for it to head on higher. So I think if you stick in the right sectors of town, meaning that the large to medium, and maybe even in some of the smaller plays, but just down at the lower end, that's where you can go wrong. And I don't suggest that for the general public. But these ones, I think you can't go wrong with it.
Jonathan, thanks for joining us on NBC Markets.
Thank you.
And that is the trade.